There are price levels that the algorithm refers to every single day. Levels that give me setups every week. Most traders completely overlook them, but once you understand how the market trades at these levels, you'll never look at your charts the same. In this clip from our live trading room, you'll see how I framed my pre-market targets using session highs and lows. These levels act as magnets, showing me exactly where price wanted to go. I saw my setup forming, targets were looking to be delivered, but I wasn't just going to jump in until I got the specific signatures that I was looking for with that model I was using. This is what separates the professionals from retail gamblers. The gamblers are just focused on short-term wins, taking trades, whereas the professional is looking to have a rule-based process for them to take trades so that they can become consistent. Professionals operate with discipline. They have specific rules and a specific model that allows them to take a trade. Watch and see what happens when a disciplined trader is in front of the charts. Was I able to get in and right into my targets? Or did the market run without me? All right, so weekly chart, guys. We delivered that weekly fair value gap. Tommy yesterday took your guys' attention to the consequent encroachment, right, or the midpoint of that gap here, right, which has now been delivered. What I want to see now that we've gotten into this level is how we trade there. What I'm watching is the market structure that we build inside of this fair value gap, either bullish or bearish. Those of you guys that are studying, you guys know exactly what that means. We want to see, okay, is there a run on stops, rejection, a break in market structure, right? Things that constitute a market reversal. Or do we just keep ripping through it, right? Those are all insights that we can take away because we know how to read the charts top down. So that's what I'm looking at here inside this weekly fair value gap. Is working down into the daily chart here. You'll notice the body's perfectly stopping at the midpoint of the level Tommy gave you guys yesterday. Again, not random. And then here we have that daily volume balance. I'm going to make that a slightly different color. All right, well, let's use that as a blue hue. Then we have the gray rectangle, which is, again, that weekly gap. Bodies respecting midpoint. What I want to see now is, do we stay above this volume imbalance? Meaning, do we use it as support and keep springing higher? If we lose the volume imbalance, my attention comes to that daily fair value gap, which now we have here. So from this level here to this level, that would be our daily fair value gap. And then if we lose the volume imbalance and start to show weakness through that on the lower time frames, then my attention goes down into the daily fair value gap. Marking out the New York Open. So we punched higher into the midpoint of that weekly gap. We're now breaking down through it. What I want to see is in this fair value gap here, how we trade. So we can, now that we're getting below that, label that as an inversion fair value gap. And I want to see if we can stay below that fair value gap. If we stay below that, then that would give us a run to the sell side here, and then potentially the sell side further below market price here, which would be yesterday's PM session sell side. But that's if we lose this gap here and this down close candle. If we lose that, my attention goes to sell side here, and then all the way back here if we really start to accelerate on the downside. All right, so right away, we do see the market trading through that hourly gap that I have labeled as an inversion. We see the market traded higher, respected the high, and now we're breaking down through that. So we have a shift in market structure here on the 15-minute chart, sell side here, and these relatively equal lows here. That, again, is yesterday's PM session lows. Because I'm doing pre-market analysis, I don't like to have too much on my chart. I'm not labeling these things, but when you're doing your review, your back testing, you want to start observing which highs and lows is the market running to. And you'll see it's previous session highs and lows, previous days PM session highs, previous day's lunch liquidity, previous day's AM session highs and lows. Those are all going to be key liquidity pools for intraday trading that the algorithm will refer to. All right, so let's drop down to the 1 minute. As far as opening range gap, we're opening down with a relatively decent size gap. So again, you want to have the quadrants of that gap on your chart. We're going to go ahead and do the same. It's opening with a gap down of about 65 points. So we'll see if they want to take it up to mid gap. So from where we close, where we open, mid gap is right here. And so for right now, it's getting a feel for what they want to do for the session. There's tons of micro scalps that, can be taken all day long. But you guys know, for the most part, my trading style, I'm looking to take down the lines portion of the morning session run. So I'm okay with passing up on these little price runs here in the first 2 minutes of trading. Just because I'm looking for slightly bigger price runs. And to take down those bigger price runs, you have to be patient, wait for more information, wait and see how the market's set up, right? Very similar to what we did on Monday. Market's bullish, we wait for the market to run out sell slaps, wait for a displacement, shift in market structure, right? The same things that we look for. Right, so that hourly inversion gap here, we're respecting that. We're staying below that, right? So we traded up, hit midpoint. Well, midpoint of two things. Midpoint of that regular trading hours gap here, right? and then also midpoint of that hourly inversion gap here. So what I want to see is, do we start to break down now and get below this gap here? This is our first presented fair value gap in here. We get below this first presented gap in here, my attention goes to the sell side here, and then this sell side down here at the 402 level. What I don't want it to do is just drop. I want to see it close below it, hit the low of that first fair value gap, and then I'll take a short into sell side there. All right, so no closure below. I want to see a closure below, then hit its resistance, then I'd be shorting. Not to say it still can't go lower, but I still got to trade my models, right? I got to trade it with the rules that I have in place, and I can't just impulsively jump in, even if it runs without me. Understanding that is a huge step forward in your guys' understanding and maturity as a trader, right? Not just fearing, oh my gosh, it's going to run without me, but actually waiting for the models to form. Something I struggled with a lot, admittedly, early on as well, because I didn't know what I know now, right? That there's an abundance of price runs. There's an abundance of price runs, lower, higher, lower. The only thing we need to do is increase our skill set of reading price action. And once you increase that skill set, there's tons of price runs you can capitalize on all day long, up and down. But early on, we don't understand that because we're very limited in our understanding. We can just see our one key level. So we're constantly anxious watching the market, thinking it's going to run away without us. All right, that fills me short there. It's below this low. Want to see some speed, want to see a strong close below that, and see if they get into those PM session lows from yesterday. All right, want to see that act as a bearish breaker here. This last down close here. Want to see that act as a breaker. All right, there we go. All right, guys, that's how it's done. That is how it is done. Let the market trade up the mid gap here. First fair value gap. Said I want to see it close below it here. As soon as we got that closure below it, broke down. Use the 5-second chart. All right, so the market trade up into the first fair value gap. Broke down. Fair value gap. Look at that nice entry there. Boom. Look how much heat I took on the trade. Not even 4 handles of heat. Why is that? Because it's one of the strongest PD arrays there are. Fair value gap here with a breaker. Ooh, there's 2 of them. There is 2 of them. So there's that breaker there and fair value gap, and then covering below these lows here. Why those lows down? Great question. Great question. If you guys recall on the regular trading hours, I gave you these equal lows here. And these were the previous days. What I tell you in the pre-market analysis, the algorithm refers to what? Previous session highs and lows. What's this? The previous session low, PM session lows, right? Gave you this hourly gap to read order flow. Market traded up into it. Simple gap theory. We're below a gap and the market trades up into it. It should do what? Sell off. If it does that, that's giving you clues. It's giving you insight as a smart money trader. Market breaks down. Where's the market going to attack? The smooth lows, session highs and lows. So we prepare, get our session highs and lows, frame them before the market opens, wait for the market to walk through my crosshairs, pull the trigger, and take it down. Market can keep sinking. I don't care. We're paid. And it's time to go enjoy the rest of the day. So you just saw how I capitalized on session highs and lows. One of the main takeaways from this video is how pre-market analysis meets the execution, which then meets the trade management, watching the ball go through the hoop. With this in mind, you'll now see that there's always fresh opportunities in the market. If you study session highs and session lows every day, you're never going to run out of new trading opportunities every single day in every single trading session. Hope this one was insightful. Like and subscribe for more. If this video was helpful, comment down below, and we'll do more in the future.